Nvidia is poised to revolutionize the market as the Federal Reserve prepares moves that could shake up its investment strategy. Think artificial intelligence has reached its peak. What if I told you that earnings forecasts still don't reflect what's to come? But here's the key point. With the Fed on the path to interest rate cuts, how might that transform the economic landscape and your investment decisions? Let's unravel how these elements intertwine and why being one step ahead can be the difference between profiting or losing in the next big market cycle. Enjoyed this content? Then don't miss out on the other videos on my channel. I'm sure you'll find something that catches your interest. And if you haven't subscribed yet, make sure to hit that subscribe button and turn on notifications. That way, you'll stay updated with all the new content and help the channel grow even more. I'm counting on you. Stock markets closed in positive territory. U.S. stock markets, often seen as a barometer of economic sentiment, surprised by closing higher, buoyed by more robust than expected economic data. In a scenario where uncertainty dominates forecasts, this sharp rebound in stocks could signal an unexpected resistance in the economy. Retail sales beat expectations, suggesting that the U.S. consumer, the vital engine of the economy, is still spending, even amid inflationary concerns and global uncertainty. At the same time, jobless claims, another crucial indicator of economic health, have fallen, reinforcing the idea that the labor market is far from cooling. However, this apparent strength could be a dangerous balancing act, where an overstrong economy could pressure the Fed to delay rate cuts, destabilizing the market again. The attentive investor should therefore monitor these indicators with caution, as they can be both a sign of opportunity and a trap. Forecasts of interest rate cuts by the Fed. Aaron Brown, a respected voice on the financial scene, has released an audacious prediction. The Fed will begin interest rate cuts as early as September 2024, with a total of 7 cuts expected by the end of 2025. This prediction, while bold, is rooted in a careful analysis of economic indicators that show an economy that is still growing, but at a slower pace. That controlled slowdown may be just what the Fed needs to justify looser monetary policy aimed at sustaining growth without inflaming inflation. However, Brown warns that this path will not be without obstacles. The scenario of uncertainty is exacerbated by the proximity of the presidential elections in the U.S., a period historically marked by volatility in financial markets. Investors, therefore, should prepare for a period of increased uncertainty, where sharp movements in the markets may become the norm rather than the exception. This is the time to review investment strategies, as the falling interest rate environment can benefit certain sectors more than others, creating both risks and opportunities. Infrastructure and semiconductor investment opportunities with economic uncertainty looming. Brown suggests investors look beyond short-term indicators and focus on sectors with robust growth potential, even in volatile times. Infrastructure construction and the semiconductor sector, especially within the artificial intelligence (AI) market, appear as strategic choices. The global drive to modernize and expand physical infrastructures, combined with the growing demand for AI-powered technologies, could create a perfect storm of opportunity. Infrastructure, often undervalued, is ripe for massive investment, while semiconductors, the brains of new technologies, will continue to be vital for future innovations. As we approach 2025, Brown predicts that the profits of these industries will be revised upwards, a clear sign that the market is starting to price in long-term growth potential. Investors who position their portfolios now can benefit from this positive revaluation, but they should do so with a clear understanding of the risks, especially in an environment where volatility can intensify rapidly. When the Federal Reserve's next move becomes a reality, how will it impact its investments in technology and AI? Nvidia may be on the verge of a new growth spike, but the key lies in how interest rate cuts can shape the future of markets. What will happen when the economy slows down and volatility increases? The answer may lie in the decisions you make now. Stay tuned, because the pieces of this puzzle are about to move in unexpected ways, and the next move could be the one that defines your financial success.